US and China trade talks take a positive turn. Let's have a look. Hello everyone, I'm Florian Heise and welcome to another episode of Heise Says. I've got my stein of coffee and I thought we would have a look at this article about US and China trade talks taking a positive turn, particularly Trump with his positive spin and positive message that he's putting out there. Remember, he's a salesman and a brand master. That's all part of it. But before we jump into that, let's go to my favorite website, the Observatory of Economic Complexity, and just look at three countries that I think might be important here. We have the United States. It's third with exports of 2017, first with imports, GDP per capita of 59,050 or 500. The economic complexity is seventh in the world. You can see what they're all exporting, quite a variety of goods. What they're importing, quite a variety of goods. The trade balance. Let's have a look at their destinations. So the top destination is Mexico, followed by Canada, and then China. Okay, and their top import origins is China, then Mexico and Canada. So China's their biggest import origin and their third biggest destination for their exports. Now we'll jump to another country, China. They're 33rd in the world of economic complexity. They're first for exports and second for imports. Their GDP is only 16,800 per person. I mean, look at the variety of what they're exporting. A lot of complex, machines. And what they're importing. Again, a variety. Look at that trade balance of 873 billion. And the destinations, United States is number one, followed by Hong Kong, Japan, Germany, and South Korea. Australia's down there at 1.9%. Look at their origins. Number one, other Asia, South Korea, Japan, United States, and Germany. Australia is at 5%. So we still are down there. Now, let's have a look at Australia. We're 59th with regards to economic complexity. We're 20th with exports, 22nd with imports, and our GDP per capita is 48,500. You can see here iron ore makes up a big portion of our export markets. We're not, our machinery, the light blue there, is very limited, isn't it? 5.97 billion, while our mineral products, 131 billion. Look at our imports. We're importing 48.1 billion of machinery. And our mineral products, 23.7. So we're exporting a lot of primitive things, importing more complex things. And our trade balance is, we've got a net positive in 2017 of 44.8 billion. But here are our destinations. China, number one. Our origins, once again, China and then the United States. So we are embroiled in this dispute, in this trade war or trade negotiation between China and the United States. China is the biggest destination for our products. China is the biggest source for our imports, and the United States is the second biggest source. The United States is also a source of a lot of investment in the Australian economy. So bearing all of that in mind, let's jump through and have a look at this article. But these are things that people need to be made aware of. When we're just reading the headlines and we're jumping on one thing or another, you need to think about this in a broader context, particularly when our politicians are promising the world and, they're saying, oh, we'll fix this, we'll do this. You've got to realize we're at the whim of a lot of the global events because our economy is so primitive. We're exporting raw materials that are used to manufacture other goods. That's one of the challenges. And the scale of our domestic economy, our domestic, market, isn't that big. So if you like this type of content, please share this channel, share these videos, get it out there and discuss it over a Bundy at the local barbecue. Now, I'm not sponsored by Bundy, but if you know anyone, pass them my details. I grew a taste for it because Rachel was a Bundy girl. And we'd run out of beer at home when I was a student, so I just hit up her stuff. And she was very disappointed that I got a taste for it. Dark and Stormy was my favorite, actually. So, US President Donald Trump has said China and American officials were working towards meaningful progress in trade talks, boosting hopes for Dante in the two sides' damaging trade war. Mr. Trump's tweet fed a stock rally. Well, here you go. This is the thing. I've mentioned this in other videos. The markets right now are so sensitive just to tweets. It is ludicrous. They're hypersensitive, with Wall Street erasing the week's losses as investors bet a partial pact would see the United States postpone next week's scheduled tariff increases on hundreds of billions of dollars in Chinese imports. The Dow Jones Industrial Average was up by just under 2% in late trading yesterday before easing to close at 1.2%. So people are really hoping that this trade deal will go off. But the issue here is you've got to understand you've got a lot of the issues with the Chinese economy and the way the government provides benefits to their own organizations, the complete lack of respect for international copyright laws and legislation. Yeah, it's a mess. In many ways, it's an unfair advantage. So good things are happening at China trade talk meeting. Warmer feelings than in recent past, more like the old days, Mr. Trump said on Twitter shortly after officials resumed negotiations for a second day. All would like to see something significant happen. China can just wait out Trump, can't they? Mr. Trump is due to meet with Beijing's top trade envoy, Liu He, in a sign the two sides expect to make a positive announcement. With the White House engulfed in turmoil, Mr. Trump could do with even a partial win. He faces an intensifying impeachment probe by Democrats, which polls show is gaining in public acceptance and stinging bipartisan criticism for allowing a Turkish assault on Washington's Kurdish partners to go forward by pulling American special forces away from the border in northeast Syria. Since the trade war began last year, however, moments of comedy and cheer have more than once been shattered, giving way to jolting deteriorations in relationships between the two sides. In the spring, officials said a deal was more or less at hand, only to have Washington resume tariff increases in May after accusing Beijing of reneging on core commitments already put down in writing. Overnight, meanwhile, China's security regulators set a timetable for removing foreign ownership limits in finance companies in 2020, helping attract foreign investment as China's economy slows, but also removing constraints on foreign capital. In Beijing, Foreign Minister spokesman Glenn Shan told reporters that China hoped to promote positive progress in the talks. Media reports this week have drawn the contours of a partial deal, that while not addressing Mr. Trump's core grievances about China's trade practices, would offer something for both sides. China will continue to increase purchases of U.S. farm exports and pledge to refrain from currency manipulation, while Washington will suspend a tariff increase, Bloomberg reported. Myron Brilliant, head of international affairs at the U.S. Chamber of Commerce, told reporters he had spoken with both sides and that an agreement on currency could emerge this week. I think that could lead to a decision by the U.S. administration not to put forward a tariff rate hike on October 15, he said. The U.S. Treasury in August branded China a currency manipulator, accusing Beijing of deliberately weakening the RMB to gain unfair trade advantages, making good on a Trump campaign pledge. Where matters go from there remains to be seen, however. China has so far balked at Mr. Trump's demands for profound changes in the way Beijing manages its economy, something analysts say could politically undermine the Communist Party. In an editorial on Friday, the party-owned China Daily said a partial deal is a more feasible objective and one that would be in the common interests of both sides. Here's the problem, fundamentally. I mean, why is the Soviet Union gone? How did America manage to defeat the Soviet Union? You see? And now you have another, communist nation that's kind of done it a bit smarter, hasn't it? They've opened up their economy and taken advantage of the world. So, it's dangerous. Meanwhile, the Trump administration has continued to examine ways in which it could exert more pressure on Beijing beyond simply taxing Chinese imports. Washington accuses China of attempting to dominate global industry through massive state interventions in markets, theft of intellectual property, hacking and subsidies, accusations shared by Europe and Japan. Well, isn't that just common knowledge? So there you go. And there's some more news here. Larry Kudlow, a top White House economic aide, said this week this could include highlighting regulatory scrutiny of Chinese companies operating in the US. Elsewhere, Mr. Trump is already raising the temperature of Beijing through non-tariff means. So there you go, guys. This is interesting to see what's happening. Let me know what you think. Thanks for watching. If you want to help me produce this content, I have a Patreon and Subscribe Star, and I appreciate all your support, and I'm being invaded by children, so I've got to go. Take care.